Hello, this is John Piper with the weekend video clip, and it's Saturday the 5th of November, and looking here at the 3-hourly chart of FTSE. What we've seen here is a initial peak down here, which counts quite well as an important peak, followed by a 1 wave, then A, B, C, 2 wave, then a 1, 2, 3, 4, 5. Bit of a discrepancy between the size of the 1, 2 and the 4, 5, but still valid. Followed by a 2 wave, and then we've got a 1, 2, 3. So setting up for possibly quite an important decline. I'm not sure, well, we have got the US election on Tuesday. This is liable to disrupt patterns. Any pattern I discussed today will probably be upset by that. What I suspect will happen is that there'll be various knee-jerk reactions, bigger traders pushing prices around, hitting stops, that kind of stuff. Exactly what result the election might have on pricing, etc., rather depends on who gets in, I guess. But really very difficult to predict. My overall view remains that we're peaking. I think there's a good case that peaks are in. So what we're looking for on FTSE is a 4th wave rally, 5th wave decline, another 4 wave. So I guess there's plenty of opportunity for the market to jerk around a bit into and after the election without actually doing very much. So we might see quite rapid moves, especially on the DAX, which doesn't actually go very far. The best advice is probably just keep positions small. I think gold and silver look really good, but there's no point being positioned and then being stopped out by some kind of reaction. So I think the election is perhaps more of an opportunity to enter rather than an opportunity to make profits, as it were. I think best to reduce position size ahead of the election, then maybe add as the election gyrations come in and pass away, as it were. Also have the Brexit saga continues. I did say at the time of the original Brexit vote that I expected the vote to be to remain. I was obviously wrong with that, but I also said that if the vote was Brexit, that it probably wouldn't be allowed to happen. Now I suppose it's now happening to an extent, although I now feel that it'll probably fail. I think things have gone too far already to... I can't see Parliament getting in the way of the people's wishes, as it were. Having said that, of course, we've now had a few months to digest the effects of Brexit. And I suppose one could make the case that the population at large, could now make a more informed decision about whether they really want to exit or not. But I guess that's... I think that's probably a valid point, but whether that's be allowed to have any sway and indeed what effect they might have, I have no idea. Anyway, as far as FTSE is concerned, we've got a possible we're now in the 3rd wave with more to come. If we then see a 4th and a 5th wave, it would look like we have indeed got a peak. That would then allow the markets to rally into Christmas as a corrective wave and set the scene for a bigger fall coming in 2017. Just to make that clearer, let me just clear this slightly. So it's 1, 2, and then a 1, 2, 1, 2, 3. So that would allow for a small 4, a 5 to complete the move from here as a third of a third. Then a 4th wave, which could be a bit stronger, followed by a 5th wave decline. That could easily take us over the election period. So I think, I think perhaps that the fastest period of this particular decline may be behind us, and that we're going to see we might see slightly faster moves, but not of the same momentum perhaps or moment as that. So let's get on to the DAX now. The DAX is in a slightly different position because the peak came in here just below 10,840. So again have a possible 1 wave, irregular 2 wave ABC, and then the 3rd wave, which may or may not be complete. So we could see a 4th wave here. I think the FTSE and the DAX will harmonise at some point. We may just go sideways into the election and then see some kind of movement at that point. Alright, looking at the Dow, this is the 4-hour chart. This is probably the most relevant chart for the election, I guess. But looks very corrective, this decline. A, B, C. Another very drifting A. Another A, B, C, maybe B, maybe C. In Thursday's report I suggested maybe we've seen a flat correction, it just looked a bit like that, but now we've gone a bit lower now. Doesn't really change much. Again, it looks very corrective. Maybe the election could bring in some kind of further downside, but quickly retrace perhaps. As I said, my main view is that we're going to go lower, but elections can generate quite a lot of positive feeling in many ways. I suspect that the bigger action will take place after the election. I suppose something dramatic could happen here. I think Trump now has a chance of winning the election. It certainly appears that way. And I guess I don't see why that should be a disaster, but I mean it may well be, but we won't really know for some time. I wouldn't have thought he until we actually see what he does. I think it's a bit premature to assume that if he's elected, that will be a disaster. But I mean, maybe I'm missing something important. But right now, this looks very corrective, and just that we should see it out at some point. If we take this as a final C wave, let's have a look at this. Then, well, I mean that's could be a 1, 2. So I mean, if this is a third wave, it could continue, but no real sign of that just yet. It still looks fairly subdued. Ahead of the news, as it were. Right, on to gold. I'm still counting this as a 1. Looks like the decline's now over. So we've got an A, B, C. A wave, maybe an irregular B, and then a C. Let's have a look at the form of the rally as it stands. Right, look at the rally. It's not the easiest count in the world. I mean, that could be a 1, obviously. Maybe a 2 down to there. Quite a retracted 2. That'd be another 1 to there, followed by an A, B, C, 2. Another 1. So it's quite not an easy count. This would then be a 3. 1, 2, 3. A, B, C, 4. So this would be the first third wave, as it were, or the major third wave, giving us quite a few 1s. 1, 2, 3. We could do some acceleration. I mean, this is pretty good, but we could do with more acceleration than that. It still has a slightly corrective feel, but the fact is it's regained 1300 is a positive. So I would certainly say that the low is in. The pattern as it is doesn't really allow for a biggish decline at this point. So I mean, any move below there would suspect it is all a correction. So that's probably quite a good place for stops. If you want to stay with positions through the election, but of course doing that like a news item, any stop is vulnerable. Right, one point I must make with gold, this is a 30% 300 point move, roughly. 320, whatever, but over 30%, over 300 points. If this is actually the wave 2, so that's a 1, 2, this is the third wave starting up, it's quite normal for a third wave to be Fibonacci 1.618% of a wave 1. This means that we could be seeing we could have started a move of 500 points, 50% move, so 500, 600 points coming in at this point. So £10 a point, obviously 500, 600 points is 5,000, 6,000 pounds. So that's the kind of move I'm expecting from this rally. And I'm not saying we can get all of it. I'm not saying you should do anything other than what your normal trading approach is, but I mean, there was the gold trade I did a couple of days ago. Let me just look at that. Right, I went long on gold here on Thursday. The reason being, we had this ABC, A, B, and also 5 waves down to there. So my reckoning was that looked very much like a complete ABC. We had a bit of a spike there. At the time, my stop was below there. I think when I sent out the alert, I sent out an SMS alert to subscribers. The risk was about maybe 8 points. So £10 a point, 8 points is £80 risk. And the possibility is that we could see 500 points here. So the risk reward there is exceptional. It doesn't mean to say that, of course, we'll see 500 points up without this stop being taken out. But the pattern looks fairly positive right now. I guess the biggest question mark is if this is a fifth wave, then another wave down could challenge that level. But what I'm really saying is that there is the possibility of a fairly solid move on gold and silver at the moment. So, and occasionally it does throw out patterns like this, where you do get this very tight risk, ability to enter with very low risk levels, and given the possibilities, then that kind of trade is something that you should be thinking about taking if it suits your trading purposes, etc. I'm glad we're on this at the moment. I just wish, well, it would just be nice to see the thing thrust up and not fail just beyond 1308. I mean, the wave pattern here is a 1, 2, I guess. So a third wave could obviously go a lot further than 308, but that remains to be seen. Alright, so also looking good. Again, I count this as a 1, and then an A, B, C, A, B, C, B, and then a C down to there. The Fibonacci, sorry, the 50% level is right. The 50% level is around here, so that's offered quite solid support. And again, we went long on Thursday. I think the stop was below 18, as I recall, and we're in profit at the moment. So a similar pattern, similar criteria. This was a move of around over 50%. That's over 50%. So 1.6 would be over 80%. So again, a lot of potential, and these low risk entries you can pick up are quite handy. Extreme stops works well on these markets. So if you agree with the story, then look to your own trading to what might prove useful. Anyway, on that note, I'll call it a day. Hope you found that interesting and useful. Back to the report on Tuesday morning for subscribers. Have a great weekend. Thanks for listening, and bye for now.